It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Thursday evening, April the 21st, 2016. Another exciting newsletter in store for you tonight. We got crude, S&P, gold, and of course the euro. Another session filled with volatility today across all the different markets. Crude oil pulled back pretty significantly off yesterday's big run higher after that double top we talked about last night. The S&P got tossed around like a ship without a rudder by some lackluster earnings report. It is earnings season right now. While gold and the euro were extremely chaotic on the reaction to statements from the ECB this morning. Boy, another never a dull moment in these markets, I'll tell you that much. Before we get into charts tonight, though, I do want to remind you guys to make sure you're watching this video on our trading blog. The only place to watch the full-length version of this nightly newsletter is on our blog here at sidewaysmarkets.com. If you're watching the video on our YouTube channel, not to worry, there's a link in the description of the YouTube video that'll take you over here to our blog, and that way you can watch the full-length version covering all four markets. While you're here on the blog, don't forget to grab a free pass. Come out and join me as a guest in our trade room for a few days next week. Register for the newsletter mailing list in the lower left-hand corner. I'll send you an email every evening when the newsletter is ready. Right below the video tonight, don't forget to download all the charts that you see me using in tonight's video. That way you have them ready for your trading tomorrow morning. And of course, don't forget on the right-hand side, I'll encourage you to register as a trial member to learn more about the strategies that we use here at School of Trade and what it means to be a member. One last thing, too, don't forget, we always have someone standing by 24/7, 365 to give you guys a hand every step of the way. Ready to rock and roll here for tomorrow, finishing up the week, this third full week of the fourth month of the year. Hope you guys are having a great week with us so far. Schedule for tomorrow is pretty light here, as you can see. We've got a bunch of economic news coming out in the European session. So if you are trading the European session, Asian or European session tomorrow, please make sure to check the calendar for that. But for all of us in the U.S. session tomorrow, we got 9:45 a.m. We got the PMI manufacturing index flashed. Pretty good timing of that news event. Hopefully we'll get a little bit of a spark to finish up the morning session tomorrow morning. Don't forget, Fridays are early in, early out. That means get to it early. I always recommend that sweet spot between that rollover between the London session and, of course, the U.S. morning session, 7 a.m. until 11:30 a.m. Monday through Friday. That's always a sweet spot, right? That's that rollover between, or the kind of overlap between the afternoon London session and the U.S. morning session. On Fridays, that pretty much gets cut back to about 11 o'clock on Fridays. We typically don't see much after 11 o'clock. Usually gets pretty quiet. You're more than welcome to leave positions open after 11 o'clock, but I do recommend be very, very careful entering your new positions after 11 a.m. Eastern time. Remember, at the end of the day, at the end of the week, at the end of the month, at the end of the quarter, at the end of the year, traders take bigger risks. They've either dug themselves into a hole or they're playing with quote-unquote house money. So don't forget, bigger risks get taken in the afternoon session on Fridays. And when you combine that with lower volume, increased volatility, you have a very dangerous environment and a very thin market to trade. Don't forget, we'll teach you all the details about when to be trading and, of course, what to be concerned about in our beginner's course here at School of Trade. Let's keep moving. You got a good plan for tomorrow? 9:45 a.m., as you can see, is the only news for tomorrow morning. Early in, early out for a Friday. Let's jump into crude. Crude is bearish this evening, trading inside a range as it tries to finish rotation to the lows of a bear channel and complete a measured move target for the sellers. The bear channel tells us to expect rotation from high down to low and tells the sellers to look for trap opportunities at the highs on the way down to the lows. The trading range has a bearish bias to it, so the sellers will be looking for buyer failure at the high and breakout pullbacks at the lows, while the buyers will be looking for ways to pick a bottom if the sellers fail to continue the breakout pullback below 43. The measured move is waiting patiently as a target for the sellers, and of course, the high of day up at 44.48 is the target for the buyers tomorrow. We got three basic technical clues here on the chart tonight for the oil. First of all, we get the bear channel. Bear channels are pretty straightforward, looking for channel rotation inside of a bear channel. High to low to high, high to low down to high. Sellers want to be looking for opportunities to sell at the high of a bear channel. Now remember, whenever we have a bear channel, there are always going to be a few different opportunities here to make some profit on a bear channel. First of all, if price goes higher, sellers are always looking for buyer failure to sell it back down. Also, as this price goes to the high of that channel, buyer failure as it comes back down. And of course, if we do start seeing the price break down here, we go lower, right? We're looking to sell those rips on the way down to the low of the channel, right? Channel rotation. At the same time, if and when we get down to the low of that channel, buyers will then be looking for that double overshoot for an aggressive reversal to try and pick a bottom. Don't forget those double overshoots. You always want to have that 1 to 2 risk reward ratio. What about the trading range? The trading range on the chart has a bearish bias to it. As you can see here, the trading range, we are bearish going into that trading range, right? We're bearish going into that trading range. And of course, you can already see here the buyer's trying once, the buyer's trying twice and failing. We want to see another one of those tomorrow for great opportunities for the sellers to sell those highs. So of course, when we talk about trading ranges, there are a couple key components. First of all, range rotation. High to low, low to high, high to low, low to high, high to low, right? And as you can see here right now, we're coming off the high, so we're expecting to see a rotation back to the low. Then of course, back to the high, and of course, rotation continues. Just like a channel, low to high to low, we call it rotation. What else do we know about a trading range? We also know to focus on failures. Failures come in the form of 2 tries, 1 and 2. So as we go to the low, I'm looking for sellers try once, try twice. If they fail, I want to buy it back up. We go back to the highs, buyers try once, buyers try twice. If they fail, we're selling it back to the lows. There's one more piece to a trading range, and that is the pendulum swing. Think about there being a pendulum right in the middle of that trading range. Let's say, for example, that we shoot lower, sellers try once, sellers try twice, right? And they fail and go back up. That pendulum now is going to swing about equal to the opposite direction, right? Try to go up, try twice, fail back down. Now remember, that could also be if we get a big move lower, sellers try once, sellers try twice, and then a big correction higher, right? So remember that pendulum swing, as it tries to go lower, it's going to try, fail, and then finish the job. Equal, right? Equal, that pendulum will swing all the way back up to the opposite side. Most important thing right now is there's a bearish bias to it, which means sellers would love to get another trap high and sell it back down, break out, pull back, and of course continue back down to the measured move and the low of that channel. What else we got here? Speaking of measured moves, pretty much the easiest measured move we have in the chart tonight. You can see here A, B, B up to C, C down to D. 42.58 is the target for those sellers. That will be the ultimate target for those sellers in this, maybe not ultimate target, but short-term, medium-term objective for those sellers. I would say right now the short-term objective for the sellers is back to that range low. The medium-term objective, though, definitely down to that double down, measured move area. And then, of course, long-term objective would be all the way down at the low of that bear channel. What do the bears want to see right now? The bears have control of this market here right now. What do the bears want to see? The bears want to see buyer failure at range high. Buyer failure once, twice at range high. They also want to see a breakout pullback. Now, breakout pullbacks, I have a different way of looking for breakout pullbacks. I look for the lower low, the move back in, but then rather than just simply selling it on a breakout pullback the way that most people will learn in a book somewhere, that's not as reliable as it used to be. What I like to do is I like to zoom in on this a little bit shorter time frame and look for an area where buyers, maybe a 50% pullback, might be looking to buy it and go higher. Right? I'm sure you've probably heard about those, Fibonacci retracements, 50% pullback, 61.8% pullback. The reality is that is a bearish market. If they're successful, then we know where it's going next. If they're unsuccessful, then you have a way of selling into the stops of the buyers. And of course, that's going to give your trade some juice, because when you are selling, when the buyers get stopped out, they are selling as well, right? Doesn't get much better than that if you're a seller selling and the buyers are selling as well. Then, of course, targets will be down at the measured moves and, of course, down at the low of that channel. What do the buyers want to see? The bulls want to see a breakout pullback at range high. This is the same thing, right? So rather than taking a breakout pullback at range high, drill down a little bit closer on this. Think about where those sellers will be trying to sell into that move. And that's, of course, where you're going to want to see them fail. And that will give you the opportunity here now, right, to buy that breakout pullback. It's a little bit more of a crafty way. I think it's a lot safer than just simply trying to take that breakout pullback. Because don't forget, it's a bearish market, and it's going to want to tumble back down in. If it tumbles back down in, then we know where we're headed for. What else looking for here for those buyers? The buyers are also looking for seller failure at range low. So again, once, twice, sellers fail, buy it back up. Now, it would also be worth mentioning too, if we do end up all the way down at that measured move, you can also look for what we call the double bottom reversal at a measured move. Also, possibly, if we get to the low of that channel, a double overshoot reversal at the low of that channel. Just keep in mind, though, when you look for those types of reversals, make sure you see proper context. Don't buy into a runaway bear market, right? If there's some unexpected news that comes out, don't try to buy in a runaway bear market. And also, too, make sure you remember those types of reversal trades, those counter trend trades, you always want to remember to have that 1 to 2 risk to reward ratio. So 20 tick stop, 40 tick target. Because those reversal type trades, they're only going to be about a 50, maybe 60% on a good day winning ratio. All right, got a good plan there for crude. We'll be looking forward to seeing you guys tomorrow morning with us in our trade room at 8 a.m. Eastern time, and we're going to do it all together. Next up on the E-mini S&P, quite similar to crude oil. You know, I've been calling the S&P the crude shadow this year. Very similar to crude this evening. We got a bearish trend and trying to complete its own rotation down to the lows of the bear channel and possibly a triple measured move tomorrow. Now, the bear channel tells us to expect rotation from high down to low, and the sellers will be looking for traps at the highs and continuations down to those lows. The trading range tells us the sellers to look for failures at the highs and the buyers to look for seller failures at the lows for a possible bottom. The measured move at 82.75 is key support and resistance right now, with the triple measured move being the ultimate target for the sellers right now, and the high of day all the way up, just an inch or two away from all-time highs at 21.04. That's the target for the buyers tomorrow. As you can see here right now, we get a big bunch of clues here on the S&P. First of all, bear channel. We just talked about this bear channel on the crude oil. Now you guys know are experts about bear channels, right? So high to low, low to high. What do we call this? Rotation from low up to high and then high down there to low. Nice and easy there. That's going to be the ultimate or the short-term objective for those sellers right now. As you can see, though, at that bear channel high, that's where sellers are looking for traps, right? That's what we're looking for buyers to fail and sell it back down on the way down. When we get down to those lows, that's where the buyers are looking for double overshoots, right? That double bottom, that two-try failure. It's a counter trend reversal. Those are those trades I was talking about earlier that are important for you to analyze context so you don't buy into a runaway bear market. If there happens to be some irrationality to the market tomorrow morning, we'll definitely help you through that tomorrow in the trade room. And of course, at the same time, make sure you use a larger target than your stop loss, because that will also be a very important piece of that puzzle. What up next here? Trading range. As you can see, you get a little tiny trading range on the chart here. You can see the rotation from high to low, low to high, high to low, and then of course, buyers try to break out and they get sold right back down. We have to remember right now is that is now ripe for a breakout pullback. We talked about the breakout pullback, right? We're looking for those buyers to come in and try to buy here, and then of course trapping them on the wrong side of the market to finish the job. If we do end up all the way back up inside that range, don't forget about the pendulum swing, okay? Because the pendulum swing will likely take this price now all the way up here, and then of course, you know what we're looking for. Buyers try once, buyers try twice. If they're unsuccessful, sell it back down. If they are successful, it'll be a bullish market, and they'll be gunning for the areas of resistance left overhead. What else do we know here? Measured moves, measured moves. In my opinion, that measured move is really the line in the sand right now. This is going to be a very important level of support and resistance at 82.75.